How's everyone doing? So for today's lesson for Thursday night, we're going to just be doing personal advice from the admins for you guys to basically send rapid questions either in the chat for Zoom, in the Discord under the Trade Academy session for the lesson for today. So if you guys just want to go ahead and start listing questions while we wait for Mitchell to show up, and Kenny, myself, Michael, or Hassan can start speaking on our personal experience and how we have overcome stuff and gotten to where we are basically. Any personal advice that you guys want, anything that you're struggling with, basically anything that like you want direct help with right now is your chance. We're going to be here for an hour just to answer any questions. You can direct the questions directly to someone. So it's free ground for anyone right now.
Good evening. My name is Donald. I have a question I wanted to ask.
Yeah, go for it, Donald. You're good.
Let's say, how can I work on being patient? Let's say to wait for a setup to come to you, and also when it gets there, to also have the confidence to hold it. Because I'm realizing past couple of months that has been my issue. Let's say if I have a setup and I let it come to me and fear allow me to leave it and it goes my way, and then there's the time I want to enter the trade again.
So, I'll give you a short explanation. I'll let Hassan and Kenny and Michael branch off me. But one of the biggest things for me when it comes just to holding a player, knowing when to enter, not rushing it, is more so always thinking about like what's the possible downside if I enter at this spot and it goes against me. One of the biggest things that's helped me is always being more prepared for the losing side of the trade than the actual winning side, because the emotions as you go out, I feel like hit harder when you're red, and being green. I think my personal opinion, the only thing that really matters is being able to trim, put a stop loss in profits, because at that point you're guaranteed like a win overall. So I personally like to think about the downside, prepare for having to cut early. It really lets my emotions off and I can hold longer because I'm already prepared for the possible worst that could happen.
Okay, thank you.
And I don't know if you want to say anything, Kenny or Hassan, for holding longer or knowing when to sell early if you have to.
Yeah, I got you, man. Can I share my screen? Yeah.
Yeah, definitely.
Yeah, you have to enable it so I can do it.
Let me find you.
It just says multiple, you have to click on allow multiple people to share screen. Next to the share screen button, you see that there's like an arrow.
Oh yeah. Multiple participants. Okay.
You guys hear it?
All right, beautiful. So how can you hold the trade, for a longer period of time? What can you do to hold the trade? I'm just going to take an example of today. Before going into any trade, I have something called a planned risk to reward. So I'm going to just take an example here and say that my entry is going to be 40.56, and my stop loss is going to be 40.60, and my take profit is going to be 40.50, for example. Just an example. So before going into a trade, I have planned that I am going to, if it crosses above here, this is my risk. So my risk in this particular case is 3 points. So if I look at risk, and let me just annotate it real quick. Where's the annotate button? Just give me 1 second. Where's the annotate button?
I'm not too sure.
Do you have like an annotate button for you?
I've never used one.
On Zoom itself?
Where is it? It's not here.
I don't see it.
Okay, doesn't matter. So how do I hold the trade, for example? Going into every single trade, I know exactly what my risk is. So let's say, for instance, my entry here is 4056. Okay, and my stop loss is 4060. So I'm risking $4. I'm risking 4 points. And my take profit is going to be right here, which is 4050, for example. 4050. Let's just say 4050. Right here is my take profit. And as you can see, I'm risking 4 points, for example, in this case, $4 to make 6. So my risk to reward is roughly 1.1 to 1.5. To hold it longer, to make a kind of trade where you want to enter a trade based on good risk to reward, you want to look for risking. If you're risking 4 points, you want to look to make at least 8. That way, your risk to reward is 2 to 1. So any trade I'm entering, if I'm risking 4 points, so I'm risking $4, at least it has to make at least $4. So because 4056 is my entry, minimum, in order to hold this trade, I need to at least hold it to 4052. So that would be 1-to-1 risk. So if I'm risking $100 to make $100, and then at 4048, it would be considered I'm risking $100 to make $200. So going to any single trade, I immediately know how much I'm going to lose versus how much I'm going to win. People ask, like, how do you hold the trade? Because when I enter the trade, I'm planning a 2-to-1, I'm planning a 3-to-1, a 4-to-1, a 5-to-1, in order to enter. Same thing, like if you enter at a contract, it's $1 and your stop loss is 0.80, that means you're risking 20 cents per contract. When it hits 1.2, that's already 20%. So now you're at 1-to-1. When it hits 1.4, you're sitting at a 2-to-1 risk to reward. And in terms of risk to reward, you should always be shooting for 2-to-1, 3-to-1, 4-to-1. 1-to-1
Minimum.
1-to-1 is good for scalps, but when you go above 2, 3, 4, if you're shooting 2-to-1 and you have a 60% win rate, you will always be profitable. As opposed to shooting 1-to-1, you need like a 80% hit rate to be profitable in the long term. So going into a trade, you have to kind of exactly have a planned risk to reward. And I mean, just a random example I just took from today. We can kind of take it on another example. I don't know, Baba, like it was ripping the other day. Let's say our entry is 100 is my entry. Like let's say here I enter here 101, and my entry here is 101. And my stop loss here is 100. So I'm risking like $1. And if it goes to 102, it's basically 1-to-1. If it goes to 103, it's basically 2-to-1. So before going in any trade, before I plan the trade, I plan how much I'm willing to lose. And once I understand how much I'm willing to lose, I take the trade. Pretty much.
Hey, can you guys hear me?
Yeah.
Yeah, so it's Kenny here. Sorry, I'm at the gym, so hopefully you guys can hear this. But just off Hassan's chart there for Baba, right? And I kind of talked about this on the live stream today. The other day, I alerted a Baba swing for the 100 calls, and the risk to reward there, the contract itself, ended up printing about 1,000% return. That's 10x. So one of the things that I talked about today was that you want to set up, and if you're new or you're a little bit more novice to finding or defining risk to reward, spend the afternoon after market hours looking at the options premiums, right? Look at the historical values of the contracts and ask yourself a couple questions. Number one, does this contract in the time frame that I'm looking give me at least a 5R multiple? Meaning, if the contract costs $1, does it have a historical high of at least $5 or more? That's number one. Why? The importance of this is that the goal is to get to at least 100% or somewhere between zero, let's say 15 to 100% return. If you have an options contract with high historical values and you have the right timing, right, you're going to be already setting up yourself for an easy trade in the sense that once it hits 100%, that is kind of like the minimum that you're expecting for the time frame. Now, Hassan does his RR a little bit differently than I do. I like to look at the historical premium so that I can see, okay, in a trade, I know if this is a historical low, right? Let's say the trade right now or the contract's at $1 for Baba, I think it was 75 cents. The low was 30 cents. That right there shows me that there's probably 50% drawdown on a swing trade for, let's say, 30 days to expiration. The upside potential was 1,000%. So when you measure risk to reward in a swing trade, at least, you want to say to yourself, okay, if I'm going to give myself time, if I'm going to give myself and the chart and price actions to play out, I'm going to set those risk to reward levels, right, on the chart day to day, and I'm going to monitor those. I'm going to look at historical levels or key levels where the price has invalidated at that level of where I'm looking to enter, and that should kind of help you define, okay, this is a comfortable trade for me. Now I just have to give it enough time in the trade, etc. Another example for today, I alerted the 40-40 puts right near the top. I said, okay, we have a 15-minute channel. We have a high and a low. You just need to wait for the break. There's a downside gap. That downside gap, very quickly, I was able to look at the contract on the 40-40P. I said $4 is a good entry. That's what the price was currently at. The downside risk was $100 per contract, right? Or actually, the entry was 3.5 and then downside was $3. So I think it was like $50 on the downside, roughly 15, 20% drawdown. But the upside opportunity was about $10 or more, right? So those are some little simple things that if you're looking at a trade outside of market hours, you can kind of prep yourself ahead of time. That's what most of us traders do. And if you're during market hours, you kind of run through that same analysis at a quicker pace and then assess, are you comfortable with the speed of the price action that day?
Mitchell, do you have anything you want to add to that as well? Or do you want to move on to the next
To
question?
to the premium side, I mean, I look at that in a different way than both of them. Well, I think Kenny's is a little bit similar, but I'm not really on a day-to-day basis necessarily looking at the historical premium. It's more of a combination for me of the chart levels in correlation to where the actual option premium was at those levels. Now, it gets a little bit iffy for zero DTE when you're trying to do it, but there are contracts today where you look at a place on the chart, right, and you're going to retest it, and you're like, oh, well, previously this was at, just for, I guess, example purposes, this is at 20 cents, right? So when it comes back down to that level, you can assume that it's going to be about 20 cents, right? So I start to do that analysis, and that's kind of where I determine my cut level. So I'm going to be like, oh, I'm looking at, I guess, yesterday or today, or the day before, like 395. So then if I'm looking for a contract, I'm going to take calls. I'm looking to see where that's going to be, like the actual price of the contract under 395. And that's kind of how I determine my level. It's not always 100% because you do have theta decay, but it does give you a better estimate. And that's why when I show people the setup, it's like, I always have the chart that I'm trading. And then I always have the option contract that I'm trading because I can correlate the value of the contract in relation to the actual underlying price roughly. So you know that it's like, hey, I have a support down here. The option contract should probably be down about 15% when we get there. If it goes under that, I'm out because that's now my stop loss. That's how I determine the stop loss of 15, how I determine the stop loss of 20 or 30 or whatever. So I think that is different trader to trader. But the main thing, like Hassan was saying, it's like going into a trade and having a plan in place, knowing where you want to take profit, what's going to be a comfortable number for you to take money off the table, as well as knowing where you need to cut the trade because it's losing. And that was the big thing when we were in VC today. It was before you go into a trade, you need to understand what the plan is in its entirety. You can't be rushing around trying to figure out, oh, what's my exit? What's my exit? When you already have money on the table, you're not thinking clearly, and it makes it a lot more difficult to make smart choices. Whereas if you have a plan before you even take the trade, before you even fill the initial order, you just need to click a button to execute the strategy that you had already planned when you had mental clarity. So I think that is really important for people. That is why it's more difficult to do that when you're scalping because you are going, instinctually off price action. It's in and out very quickly. But if you're looking for longer term setups over days, over weeks, over years, you definitely have the time to plan out your trade, right? Wait for the market to come down, meet the conditions that you're looking for in order to enter this trade. And then it's as simple as, oh, I hit X for my profit take profit, right? Oh, I hit where I should be cutting, cut it. And then you need to just stick to those rules. You see so many people, especially on the lottos or any of the quicker scalps, the ones that are moving like very, very rapidly, something will shoot up 60, 100%, and then it'll come back down, it'll be break even or worse, it'll go red. And then people will be like, oh, are you still holding this? Like, well, where was a comfortable point for you to take profit? Why were you not satiated with 60%? Why were you not happy with 100%? You need to, when you're planning these trades, while we want to, and we know that there's potential for these trades to go 100% plus, you have to realize that there has to be a level of comfortability in your own trading where you can be like, oh, I hit 40%. Let's de-risk. Let's take some money off the table. Let's trim a little bit. So knowing that about yourself, the sooner you come to that realization, the sooner you start to accept yourself as a trader, the more consistent you're going to be.
Yeah, I think Mitch, I'd like to touch on that. I talked about this in the last class with Breezy like a while back, right? Defining your character and your behavior as a trader. Are you someone who's impulsive as a person? Because if you're impulsive as a person, that could correlate to your trading, right? So that might mean that if you're in a scalp trade or a zero DTE that Hassan or Mitchell or anyone calls out, then you should know your personality is like, okay, I'm someone who likes quick success. So when I see that 25%, 30%, 40% really quick, I need to be trading in accordance to that behavior and maybe take profits, or very simple, like I say, raise your stop losses so that you're in the trade if it continues to go up. But as soon as it comes back, you get stopped out in profit, right? It's that could be your head rush. If you're someone who's a little bit more patient, right, you might develop the trades like Mitchell said, and you might have targets to the downside where you say, okay, I'm willing to let this play out until my stop loss hits or my break even hits. So defining the personality is important.
A quick way to test that for each individual person, just ask yourself, if I took 20% profit on every single trade that I've ever taken that got up to 20%, would I be better off, right? When you start to factor in, like I know for certain I would be significantly better off on a lot of trades if I had just taken profit at some point, right? So ask yourself and really do a reflection. Would you have made more money, or would you have kept more of your money if you just took profit at some point? If the answer is yes, then you need to go back and think, well, why didn't I do that? And then it's all about the internal reflection. It's figuring out what your own deficiencies are or your own kind of fatal flaws in your trading and starting to work on them. Because I know that there's tons of plays all the time. It's like, yeah, I don't want to take 20%, but what if I just did that? Would I be a more consistent trader? And when you start to think backwards in that way, you can really start to dissect what your issues are. Are you just holding too long all the time? Like you have something that's way up and you let it come back down. Well, what the fuck went wrong? Why did you do that? Why were you not happy with that? Were you just hoping it was going to go further? Or was there an actual price target, an actual objective that you were trying to reach and it just didn't get there? I know a lot of people that overhold positions, whether it's to the upside or to the downside, they don't necessarily have a target in mind, right? They're just holding because what if, right? If you're just holding because what if it goes further, what if it comes back, then you're just setting yourself up to be brutalized by the market. The market's going to have its way with you. You have to have a clear plan in place at all times.
So I'm going to read a question that was posted a few minutes ago. So this one says, I know this question has been answered a million times, but still sometimes my emotions come into play and I oversize, I overtrade, and I lose it all. I've been getting better thanks to Breezy. I know why I shouldn't overtrade and or oversize, but sometimes I still feel like doing so. How do I not do this?
I mean, that yeah, that one comes down to you as a person. As much as we like to tell everybody, size accordingly, we can't be there standing over your shoulder to, slap your hand away from the keyboard. It does come down to your own personal. If you don't have the mental strength to stop yourself from sizing in, take all that money out of your account, right? If you have 10,000, you're like, oh, I'm only going to size in with 1,000. Only put $1,000 in your account. That way, if you do somehow find yourself full porting it, at least the full port that you have available to you at that time is really what you should be sizing in with anyway. Now, that's like a pretty drastic way to look at it. But it's like it's somebody with an addiction is what you're looking at. If you can't control the money in your portfolio and you're just letting it control you, the only solution is to take away the ability to even do that. I was saying that in class yesterday. It's like I had a time period last year where I just couldn't hit, and I had to remove the money from my account to stop myself from doing something quite similar to that in like a revenge trade fashion. So I think that that's probably the easiest way. I don't know if you have any ideas on that, Hassan.
I mean, this week is a perfect example of it. You know, there's setups in this market every single day. If you do not take a trade today, or you don't look at the market today, the market's still there tomorrow, still there for another 252 trading days out of the year. You know, once you feel that way, where you cannot have any control over yourself, that is the perfect kind of way yourself is telling you maybe you should kind of take a step back. You know, whether it's from a mental health perspective, whether it's from an addiction perspective, whether it's from like a trading perspective. This week, I didn't even open the market, not even one time. I turned off all my alarms. I slept later on purpose, so I wouldn't even wake up. And I really just didn't care what the market was doing. If the market is going to ruin your mood, ruin your life, because you're oversizing and over trading, then you're not really trading at one point. You're pretty much using the market as a casino or as a dopamine effect for you. So if you feel like you're sizing up and you're losing, or you're taking multiple losses in a row, or your quality of trades aren't the best, that's pretty much the best way, is to pretty much step back, take a step back, take a breather, look at your mistakes. Every single one of us knows the mistakes they're making. You don't just take a trade to take a trade. You know exactly why you're taking a trade. You know exactly what your mistake is on the trade. If your planned risk to reward is, let's say, you know, you're risking 20%. The trade goes 20%, then it goes 30%, then it goes 40%. At 40%, when you're sitting at 2-to-1 risk, let's say you don't take profit. Let's say you don't even add a stop loss and at break even. And then the trade goes red and it goes -20, -30, -40, -50, -60. And you're still in this trade praying for it to potentially come back to break even. The only person there is to blame is yourself. You know, you are in control. The people who compare, like, for example, say, oh, the market's like a casino. Well, in the casino, if I put $100 on red, I cannot take out $80 anytime. Oh, I feel like the beauty of options is you can get out whenever the fuck you want. You can get in whenever you want. You are the one who's in control of all the variables. The only variable you're not in control of is the delta, the gamma, the theta, and the decay on the options. But everything else, you're in control. You want to trade today, you're in control. You want to put a stop loss, you're in control. You want to put a risk to reward, you're in control. So if you feel like you're oversizing, you're over trading, the best thing you would do is to kind of take a step back. For me personally, the past couple of weeks, I felt that the quality of my trades weren't the best. It didn't mean like, oh, I'm very red and I want to take red. It's just, I just felt from a term of quality, I don't like the quality of my trades because, you know, it's choppy. So take a step back, relax, refresh your mind, come back the next week. Amazing. I mean, but looking at the market, I did not miss anything. The only thing I missed is probably a call swing yesterday where the market popped up. But literally looking at the market, I have missed nothing.
But even if you take a week off, right, and you come back and you're like, damn, I missed, you know, a crazy run, or I missed a crazy drop off. That's not like the last time that's going to happen. You take a week off, maybe it doesn't happen the next week that you're back, but a couple weeks down the road, that same event's going to come back to you. Like this idea of FOMO, unless it's something like a crazy squeeze, it's once in a lifetime. Like if you're talking about GameStop or AMC or something like that, maybe. But for the most part, everything that you're experiencing on a weekly basis, it's going to happen again, right? Just because you didn't get it that week doesn't mean that, oh, it's gone forever. It's like away in the ether. You taking a week off, resetting yourself, really isn't going to impact the market. The market doesn't care if you took a week off, which is great because then you can come back and just get back to work, but with like a more clear headspace. So just keep that in mind. It's like there's nothing wrong with taking a week off, because sometimes taking a week off could be the difference between you being able to come back and having money or just blowing it all. Like there's people all the time, they're like, oh, I'm in a very bad downward spiral. I can't take a winning trade to save my life. And they don't stop. They just keep going. Red, 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 down, 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 down. And then they have no money left. Whereas if they had taken a little bit of time off, reevaluated, refocused, they would be better for it, and then would be able to come back with not only a clearer mind, but with money still left in the portfolio.
Yeah, man, this is actually the first time in 4 years where I completely detached myself from the market. And I think it's the best thing, traders who have, a hard time kind of adapting to this type of volatility, to simply kind of just take a step back. Is the risk worth the reward? You have to ask yourself that. Looking at the chart today, looking at the chop, sure, yes, it did come down all the way from 40.57 all the way to 40.30, dropped 20 points. But how did it drop 20 points? It went up $2, came down $4, went up $2, came down $4, went up $3, came down. Is the risk worth the reward? And when you're looking at it from this perspective in the chop, and how options go, with each green candle, I'm probably losing 20%. And then another red candle comes in and I'm probably at break even until I get to my desired target. The risk is not worth the reward. If I want to come in and I want to trade with a tight stop loss, let's say I want to trade with a 10% stop loss and a 20% take profit, looking at the chart, unless you pinpoint your entry at the exact moment the candle drops or slightly before, you're not going to be able to get that tight stop loss, tight profit target. Maybe at the end of the day you could have got it, but is it worth your time? You always have to ask yourself, is it worth the risk to reward? Is it worth my time to sit there at the chart to make $20? Like, if it's not, it's just not. The market's there every day, every single fucking day. The market's there. And to piggyback on Mitchell when he said GME and AMC, if they squeeze up to the upside, even if they do go 100, 200 points, let's be fucking real. I trade SPX every day. I'm not even watching AMC or GME every day. So if I miss that, who gives a shit? It wasn't even in my plan.
And also, when you're doing stuff like that, like, the smart move would not be to put your entire portfolio into it. There's always that kind of headspace. You're like, oh, well, what if I put 10,000 into, GameStop before the squeeze? And then like you go as far back. It's like, well, what if you invested at Apple at its fucking conception? Like these things, like,
what if you won the lottery?
If you're in, good for you. But if you missed it, if you're just looking in hindsight the entire time, you're kind of missing what's happening in front of you right away. And also, just because you catch one of those, it does not make you a good trader. Sometimes that is just a beautiful stroke of luck. That's another thing to keep in mind. Like, I have dabbled in that stuff. I was in that whole thing, and that was cool. But I can guarantee you that was near the start of my trading career, and I did not know a damn thing, even though I made money. So it's like, you can catch those and be an absolute shit trader still. Those are two totally different things. You can make money and still suck at trading. Just you maybe are a little lucky.
One thing I would like to say, Rippy Mayhem here, first time caller, long time listener, is everything that Hassan and Mitchell has said, even Kenny and Breezy, is when I change and I look at my emotional state and how I feel as collateral as well and capital, I actually trade differently. Like, I don't need to feel like this. If the trade's not going my way, I don't need to be in the trade. I don't have to put myself in that position. And it's like Hassan said, like, no one's going to turn up and work a 10-hour day just to break even, or a 6-hour day of fucking mind-numbing work just to break even. Like, we don't have to be there. And ironically, when I'm not there, I step back and I do feel better. I see things clearer. And the thing that I've picked up, especially, with Breezy coming on board, is like risk management, man. Know what you're risking and know what you're willing to put yourself through. Because then when it happens, you're like, oh, okay, cool. It's not unexpected. If something happens to you that's unexpected, and you find yourself in a trade and you're losing your fucking mind, you probably haven't done the due diligence to be in that trade, or otherwise you wouldn't feel that way. That's all.
So yeah, I'll piggyback off that a bit, and if Kenny wants to say something, he can pitch in too. But the biggest thing I'll say about like just not trading, like just I treat my trading account at this point in my trading career just like my savings, my checking, my actual bank. If I have 5,000 sitting there, I'm not just going to go to Walmart, go to a designer store and just buy something because I like, oh, I have money, I want to spend it. If you have money in your trading account, you don't have to make a trade. Like you don't have to force money into the market if you're not like, I feel good about this. I want to make this trade. I need to make this trade. So I just try and treat the money as like I'd rather grow it than even risk making money on it. I'd rather just hold on to it and not put money into the market unless I'm highly confident in what I'm doing.
And that's
So
a good
that's
thing.
what's helped me.
Speaking of that, there was a point where I started to notice my trades kind of getting better. And it was when I was still utilizing a cash account, solely a cash account, and I didn't have anything in there for margin. And through the start of my trading career, I was using every single dollar that I had every single day. And there were winning days, there were losing days. But I found that when my perception started to shift, I actually had more days where I had capital left over in that account at the end of the day. Like I wasn't trying to use it. It wasn't like a coupon that I needed to use that day. And if I didn't, it expired. I started to make smarter decisions and I would make more money. And I found at the end of the day, it's like, oh, cool. I still have $3,000. I still have $4,000 in buying power, but had no inclination to actually use it. And when I started to see that, it really shifted my whole mental state, because what I was doing before is I was forcing trades in an attempt to utilize every single dollar I had, because I thought that that in turn was going to maximize the value or maximize the return on the money that I had. But the reality of the situation was I tended to make more money when I used less of that money, which seems kind of paradoxical. But for me, at least, that's when I started to notice that I was making pretty great strides in terms of improvement. I was like losing that attachment to needing to spend, needing to be in the market. And when you don't need to be in the market, you simply choose based on what your strategy is. You end up being more successful because you're not rushing to get into the market. You're letting the market come to you. And ever since that happened to me, everything flipped, everything changed. So if you are sitting there and every day you're sitting on a cash account and you're burning up all your buying power, because there's people that are like, oh, at the end of the day, I don't have enough buying power. I don't have enough buying power. I would challenge you to use as little of that as possible, right? It seems, counterintuitive, but don't use all that money. Keep some of it in there. See how you feel at the end of the day when you have, half of the account left to spend, but choose not to. It really provides this level of empowerment. You decided there was nothing there. You didn't kind of just feel the need to utilize that money. So if you haven't felt like that, I would highly recommend trying it and kind of see how it shifts your mental state. And then let me know, because that was a big one for me.
Well, that's
Kenny,
exactly it. Like,
yeah, go ahead.
oh, sorry, that's exactly it. Like, self-confidence is built from the repetition of acts that you can turn around and say, I know that I did that. I know that I can do that. I will do that. That's what confidence is. If you're not confident, you haven't backed up the things that you said you were going to do. Ergo, you don't believe in yourself. Therefore, you won't be confident. So, like, even what Mitchell just said then, like, just don't trade. Just have that ability to be like, yo, I don't need to be here. That's a win for me, because it is a win.
And Kenny, I don't know if you have anything you want to say, but if not, I can read the next question for you to start off, if that sounds good.
On to the next, man.
So
Kenny's out here lifting. He's lifting while he's listening to questions. You're gonna hear some grunting or some shit soon.
Yeah, I'm going hard for squat day. So, but listen, the last thing I'll touch upon is this. I talked about it when I first came to the server, right? For small accounts, for any type of account, really, try to set a daily goal. I mean, I'm going to send a link later in the Discord. I want everyone to go to a compound interest calculator and look at how you can compound a small amount over time, just being consistent. I think trading and day trading and scalping get a bad rep in the trading world. where you feel like it has to be this repetitive clockwork that you're doing every single day. Remember, I said it before, it's not taking a trade every day, it's taking the right trades the day that it presents it to you, right? Some people ask, what is an A+ setup? An A+ setup is essentially just going to be one of those trades, and this goes along with everything that everyone else is saying, is finding something that is in your system, right? And saying, okay, today I have defined the risk to reward for this trade. This gives me a favorable outcome. I'm going to take that risk. But if you're trying to do that every day, you're going to get into this kind of like hamster wheel of trying to force trades rather than just trying to see clearly. Today and this week, Hassan took off. You guys watched me. I didn't really put on that many trades. I watched and gave trade alerts that I thought were very viable trades that panned out very nicely. Mitchell did the same. And me personally, I didn't take the trades, right? You have to get comfortable with watching the price action, watching your trade play out. And once you get some stability and some control of your emotions and just practicing, like I challenge anyone here, take 1 week, go log into your trading broker, write down your trades as if you're going to take them, and don't take them, and watch the results. If the trades are very successful, great. Get that feeling and give yourself a pat on the back that, hey, I just got a fucking sick trade. I didn't make any money, but the concept and the principles were there. Now I just have to replicate this.
And you can't feel like a failure when you're doing that either. That was like a big thing from what I was saying yesterday. It's the same thing. It's like when I had a bad streak, I didn't trade. I still watched the charts, but I had no active money, right? And people have this tendency to look at that as a failure, needing to take a step back. But really it's a building block. It's like taking a test and failing it and retaking it and passing it, right? You're not a failure because you're retaking it. It's this mental thing where people are like, if I'm not actually trading real money, then I'm taking a step back. It's like, no, if you're taking a step back and you're learning, you're really just building on the knowledge that you have. Maybe there's a bit of a deficit there. You're really just improving the skill set to be a better trader, down the road. You don't need to be like, I'm not the greatest trader right now after, 6 months of trading. I suck at trading. I should just quit. It doesn't work like that. You can't just say an arbitrary amount of time has been invested into this and you should be good. It comes with practice. Like if you are failing, if you are struggling, especially a week like this week, it's not easy to trade, right? Price action sucks. There's not a whole lot of linear movement. And when there is, it's near the end of the day. So I know that gets difficult for a lot of people to be around. Not everybody can sit at their computer all day, every day and watch the market. But if you are one of those people that's been struggling, maybe not just this week, maybe the last couple of weeks, let's say, take a step back, right? Watch the signals, see how they play out. Take your own trades on paper, see how they play out. Just watch the movement of the market, stay invested in it, but don't put any money into these trades. There's no harm that can come from doing that, right? There is no negative. There's absolutely zero downside to just studying. Zero. All upside. So if you're having a hard time, that's what I'd recommend, because trading is not a linear process whatsoever. You'll have ups, you'll have downs, everybody does. So don't think just because you're a little bit lower than you were last week that you're terrible at trading. Maybe this is the time to just reevaluate and build that knowledge.
I'm going to read the next question that Coco has, and I'm pretty sure everyone deals with this or has at some point, but he just said, I'm going to put these 2 and 2 together. How do you stay calm during a trade once you entered and it goes red? And also, how do you execute without the fear of losing when you enter a position?
Beautiful. Coco, what do you mean by big red? What is it here?
Did he say big red or just red in general?
Yeah, you saw a big red, like right off the bat. Like you enter, you're down 20-30%.
You're right off the bat. If you're right off the bat and it's in your planned risk to reward, let's say I take a contract that's $1 and I'm willing to risk 30 cents. I take it in at $1 and it goes to 90 cents. If it's still in my risk parameter, I'm going to hold it. But if it's under and it goes from $1 to 65 cents, then it's more than what I'm willing to risk. I'm going to close it. It's just simple and easy. What is your planned risk to reward? If it's in your planned risk to reward, then you plan to maximum, your loss is 30 cents per contract. But if it's going to 40, 50, 60, 70, and then you're just straight up gambling. There's no, planned risk in order to make a reward. So if I'm going in the trade and it's immediately red, well, I immediately ask myself, is it in my planned risk to reward? I'm willing to risk 30 cents. I'm down 10 cents. Yes, I'm going to continue to hold it. Once it hits 30 cents, I'm out because that's my planned risk to reward. If it goes to 10 cents, then it immediately goes green. I'm going to continue holding it to at least $1.30. Why $1.30? Because now my risk to reward is 1 to 1. And when it's at $1.30, I'm going to add a stop loss at break even. Once I add a stop loss and break even, it is a completely risk-free trade. I do not lose a single dollar if it hits my stop loss. But if I'm in the trade and right off the bat it's red, the first question I got to ask myself, is it in my planned risk reward? If the answer is yes, I'm holding it. If the answer is no, I'm cutting it.
The other thing that you want to look at is if you're constantly taking plays and you're red off the bat, I would recommend looking at what your reasoning is for entering. If you're entering at a good spot where you're either going to see a continuation or reversal, normally there'd be at least a little bit of consolidation at your price point rather than an immediate, oh, fuck, I'm down 30% situation. So definitely go back and identify what your reasoning was or the level that you were looking at to actually enter this trade. Because for you to take a position and be down big immediately, you're either playing the news or you picked an entry that you shouldn't have entered at on that contract anyway. Because you even the plays that ultimately go red that a lot of us take, like we'll range for a minute, right? We'll be like down 10, break even, down 15, up 5. It's very rarely that you'll see us take a trade and it immediately be, oh, we're down 30%. So a little bit of reflection on why you took the trade and was there other factors? Because I mean, I've taken trades before and they have gone 30% red immediately, but it was from stupid things like, oh, I didn't know there was a Fed speaker. Oh, I didn't know there was a data release. If there's things like that, then I would definitely just reflect to make sure that you are up to date on those because it's very infrequent for the market to make massive moves for no reason. So just identifying the proper time to enter and making sure that there is no sneaky information coming out is definitely helpful to avoiding that. Also, how far out is your contract duration, right? Like if you're trying to take something at the end of the day and you see it with the lotto sometimes because the contract price is so cheap, yeah, it can look like if you take a contract that's 10 cents, if it moves at all to the downside, you're immediately down 50%, right? So the contract value has a lot to do with it too. So I could see you taking something and being down, immediately 50% if the price is 15 cents. But I find a situation like that far less likely to occur on higher value contracts that have either more of a likelihood of finishing in the money or just more time on them.
Also, he has the question, he says, how do you execute without the fear of losing? Well, if you are afraid to lose, trading might not be the best career path to choose just because you're gonna lose whether you like it or not. Like I'll be honest with anybody who says, oh yeah, trading is all wins, we don't lose. It's straight bullshit. Without losing, there's no winning, especially in trading, because each loss kind of gives us a lesson on what we should try to avoid, in the next trade or the trade after. But you execute with a planned risk to reward. That way you have no fear of losing. So if you're going in, with, I'm going to just do the same example, $1 and a 30% stop loss, you have to kind of execute on that. The max you're going to lose is $30. If you lose more than $30, then you're not following your rules, and then you're going into the fear of losing more. So as long as you're in the planned risk to reward, the losses should be minimal.
Yeah, like if you have a plan, you should already know before you take the trade how much your maximum loss is. And knowing that beforehand should alleviate some of the stress. Like you're not going to be shocked if it goes down there because you have to have already accepted the fact that it's going to go down there, right? People are saying it all the time. It's like, oh, I'm going to take this contract. I need to part ways with this money. This money, I need to treat it as though I've already hit my stop loss. right? And that's how you, where does that stop loss get comfortable for you? If you're taking a trade and you're like, oh, my stop loss is 50%, and then you get down to 50% and you're sweating because that's way too much money to lose. Maybe next time on your plan, you need to reevaluate where that stop loss should be or how much you should size in to feel comfortable with hitting that mark. Because it's when you start to size in and you hit a point where you're sweating, that's when you start to overhold, because mentally, and this is just a logical flaw that humans have, when we're already down money, we have a really hard time accepting a loss, right? It's really difficult for all humans, not just some, for everybody. If you're down a lot of money, to cut it and walk away because of the hopium, I hate to say that word, the hopium element, where you're hoping it comes back, right? Until you get to a point of defeat where, you know, there's 20 minutes left in the day, you're down 90%, and then you cut it. You need to stick to this plan and size in appropriately to kind of avoid that, because you do mentally lock yourself into trades if you have too much money and you've held it for too long. It's the downside of, I guess, the human brain. So keep that in mind.
And also, like, when you're going into a lotto, for example, when it says size for zero, that simply means I or whoever is signaling it is pretty much willing to hold to zero. So he's not going in with his entire account. Maybe he's buying one, maybe he's buying two. He's risking maybe $200, $300 on the total position overall if it goes to zero. It's not going like I'm going with $50,000 into the play until you, oh, I'm sizing it for zero. Sizing it for zero, you know, anyway, could be like, oh, I'm giving you room to breathe, or I'm letting the trade kind of play out. So, you know, a lot of people I see make a mistake, you know, is they lose a lot on lottos because they size too heavy on lotto. In the end of the day, trading is simply a risk management game. The longer you start to trade, you know, I've been trading right now almost 7-8 years, and it is a risk management game. You can have 30 wins where you're winning back to back to back to back to back, and one loser can wipe you all out if you don't know how to size properly. And I've seen it happen hundreds of times. I had a trader who, you know, I would beg to size down, to withdraw. This person would never withdraw, would never size down. You know, fast forward 2-3 years, he's almost wiped out. And I'm talking about millions. And I've seen it, you know, in front of me. And a lot of traders, they do not size properly, and you know, they end up getting, you know, fucked in the end. Like, if I'm being,
It's sizing for your account always, right? It's all fine and dandy to see somebody make $30,000-$40,000 in a trade. And you're like, oh, I'm gonna do that. And then you put your whole account in hopes that you get up to that point. But what you're not thinking is, what would that person that made all that money, what would they do if they lost everything they put into the position? Well, if they have enough money that it doesn't bother them to lose that, then the way that they're going to handle a trade with that much, I guess, that much invested is going to be significantly different from you that has now full ported a position. And you don't have if you get wiped out, you're done. You don't have the money to continue to put up position sizes like that. So that's why it's always really important to play to your portfolio size. And that's the other reason. It's like, people were asking us for a really long time to say, oh, what's the number of contracts you're going in? How much money are you investing in this play? And my big thing is, like, that really should have no relevance to people that are taking trades, right? What somebody else is putting in monetarily should not impact what you are doing on your end. Everybody has different circumstances. People's portfolio sizes are definitely not universal. We have people with hundreds of thousands of dollars, if not millions, in portfolios, and we have people with $500 in a portfolio. So there really is no benefit to me saying, hey, I'm taking 100 contracts of this, because everybody's going to need to adjust that to their own account size anyway. Knowing what you are comfortable with putting in that should just be number one. You should know that from the very beginning. Also, Hassan, when we put lottos, we should just set it up to DocuSign. They sign a waiver. They know this has potential to go to zero. It's like, I sign on the dotted line. I am aware this position may not make me any money, and then it reveals it.
you have to also think about it when someone signals a lotto. It's just like buying a lottery ticket. Most of the time, you scratch those lottery tickets, you're a loser. You know, it's not gonna hit. But if it were to hit, you know, it could be life-changing. I mean, now the lottery play is not gonna be a life-changing play for you, but it's gonna be kind of a higher percentage play with a good risk to reward. I mean, especially if these contracts are 30 cents and they go up to $20 to $2,000, the risk to reward is beautiful. Max I can lose is $30. Max I can make is $2,000, but it does not mean to go all in, so you can make $2 million. You want to be very kind of a modest with your plays, especially if you want to trade, for a longevity. I've traded, I'm telling you, for 7 years. It's not 7 years of winning. Four of those years are straight up losing, blowing ports left and right. And if you don't have kind of like a clear set of rules that you follow, or a clear system that you follow, you will fall victim to blowing your port. And when you blow your port, and I know for a fact there's 45 people in here, and I can guarantee you all 45 people have blown a port in the past. And if you have not, you will probably blow one in the future if you're a new trader. I don't like to sugarcoat things. I like to be upfront and straight.
So many ports.
Yeah, I mean, we
We're like, what do you mean? Like, what do you mean?
we all do, so it's all about how you handle yourself and what are the rules you set for yourself. And I learned this a long time ago, but do not compare yourself to other traders. With 100, 200, 300K portfolio, he can take 10 losses in a row, and with heavy sizing, and he'll still have money in the portfolio to kind of hold him, to make it back or whatever. But any smaller traders who are coming in comparing themselves with a guy who's trading with $500,000 or $1 million, and I know you see it on social media, you glow, it's like, oh, this man made 100 grand. Yeah, but how much do you risk? How much do you put on there? So have like a set rule for yourself. What are you willing to lose? What are you like? Yeah, just risk to reward. So just a risk to reward game. You have rules. You come in with a set of rules, and you follow your rules. Once you break your rules, you'll realize most of the time you will blow the point.
I mean, that kind of leads into this next question. What were your beginning struggles in regards to, I guess, finding good trades, and how much did you lose when you started trading? I mean, fuck, I lost a lot of money. I lost a number that was so astronomical for me at the time that it is still embarrassing to say. Well over 6 figures in probably the first year of trading. Finding A+ setups as a new trader, it seems like you're reading like hieroglyphics, right? When you get on a chart the first time, I can still remember it. Like, shit doesn't make any sense. And then you start looking at options and you're like, well, how the fuck does this stuff move? And it takes a lot of time. It takes a lot of time looking at the charts. Like, and I'll keep going back to that. Keep looking at charts. Keep watching premium movement, because at some point it will click and you'll go up to the chart. And I was watching Hassan for a while, and I'm like, how the fuck do you like even find plays that are going to go 60%? Right. Well, I had no idea what to look for. I'd pull up the option chain. I'm like, there's 1,000 possibilities. And I'd pull up 15 different tickers, and I'd be like, my brain would be scrambled eggs right off the bat, and I'd have no idea what I'm looking at.
You guys lying.
So
he was a robot. He was the easiest person to teach.
And no, I mean, at some point, it started to make sense. But I mean, like, everybody goes up into this and they see the money, right? Nobody really understands the difficulty or how complicated you're playing a derivative. You're playing a deviation off of an underlying price, and even the underlying price element and how that moves is complicated. So you're playing something that's exponentially harder than something that is already incredibly hard to track anyway, right? So it is super confusing at the start, and it's just the time watching it, right? You're going to be better off. You took 2 months and didn't fucking trade and just watched and paper traded and saw how premium movements actually operated and got accustomed to a couple different tickers and how they move. You're going to be better for it, because for me, one day I was looking and I'm like, oh, I kind of understand why they're taking these plays, or picking a specific strike, or playing a certain pattern or a certain level. And you slowly start to build this understanding of how things work, and you see things happen over and over and over again. And it starts to build this ideology in your head. You start to maybe not fully understand, but you start to grasp, like, oh, if I get this far up with this contract that's this far out of the money, I should make X dollars. And like the more time that you spend watching that, the easier it is to grasp. It's definitely just time invested that will take you to that level. And for me, I woke up one day and I'm looking at the chart and I'm like, I kind of thought to myself, I'm like, I kind of understand vaguely what I'm doing here now versus, a couple months before I thought I knew everything. It's like when you're a child, you think you know everything. And 10 years later, you're like, I didn't know shit. And then 10 years after that, you're like, fuck, I really didn't know anything. And now you've gone up to me, like my 30th birthday is next week. And I'm like, shit, I'm now finally, I think, just starting to grasp a few things. Whereas the entire time previous, I thought I knew it all. It's definitely a road like that. You think you know everything, and then the market humbles you and you're like, maybe I don't. And then you learn a new thing and you're like, okay, I think I got this now. And then the market slaps you down again. And you're like, well, maybe not this time. And it's like those kind of building blocks, right? Of thinking you know something, finding out you don't. Knowing a little bit more, finding out you still don't know that much. That progress. It takes time though. Like, and if I can't even lie, I was on the charts 12 hours a day for well over a year, like just constantly. I was going cross-eyed. My eyes hurt because I'm staring at charts in bed.
It's a
Yeah,
mess.
it's a lot, dude. It's like if making that amount of money was easy, everybody would be doing it. And it's not. But when you start to get a hang of it, like it does have a lot of upside, right? Nobody's gonna present you. You can't kid yourself. It's like somebody gives you the opportunity to make $40,000 in a day, to make $50,000 in a day, to make $100,000 in a day. And
Yeah,
you're
that
gonna
ain't
tell
gonna be
yourself
easy.
that you think it's fucking easy. In what reality do you live in? Like there's no chance. Like tell me, oh, I just found this thing on the internet. People are making 6 figures in a day. I bet it's super fucking easy. No, it's not. You can get lucky. It's like a roulette table. You can hit black, 20 times in a row, hypothetically. Doesn't mean that you're good at it. You could be lucky a few times and make a bunch of money, but can you do it consistently? That's the difference between somebody that's a gambler and somebody that's a trader, right? It's the consistently being able to do that, consistently being able to find the setups, consistently being able to execute. That takes time. Getting lucky, you can, with your first trade, you could take 1,000% trade. You're not a great trader. You got lucky. It's the time invested that takes you from the gambling element to the trader longevity. Oh, I can see myself doing this till I can't, like till my fingers give out, sort of thing.
Hey, to touch on that too, guys. If you're new, like I'm just talking for people who are new or a little bit less experienced or haven't had like a couple of years in it. Trading is fast paced for the most part, right? Minus like obviously you have some markets where it's a little bit slower. You have some weeks or months where price action is slower or just like the trading style is slower. But if it's in a fast-paced environment like before, it's your responsibility. You're in control, right, of the computer. So the easiest way, and like I'll talk about how I started trading, right? I started as a swing trader and I worked my way into day trading. So I started trading contracts 6 months out, 9 months out, 12 months out, and I would take close to the money contracts. I would play with out of the money contracts. I would see how they moved. I studied the patterns, right? I'm an analytical person, so I like to study how things move, how behavior works in regards to the contracts and or price action. And then you could start making little notes to yourself like you did in school, right? When you're studying for an exam or a subject of, okay, this does this when this happens. This does this when that happens, okay? As you start to master it in longer time frames, whether it's live trading, on demand or paper trading, writing it down, mental trading, you could start to work your way closer and closer to shorter expirations because the principles will be the same across the board, right? Just because Hassan or Mitchell or any of us are taking zero DTE, right? And let's just talk about lottos because we've seen those lately going a lot, like very parabolic. Just take an extra day, right? If you're a little bit scared about the risk of the downside, right? And the probability for the setup is there, take an extra day till expiration, take an extra week. You saw me say it on Friday, right? On Tesla last Friday, I took that trade. It went horrible. What happened literally the next weekend, Tesla opened up at 195. And I had said in the watch list, I just didn't even respect my own rule at that point, that if I was going to take a trade, I'm going to look for something with one more week of expiration just to buy myself the time to let the trade play out. So that's another thing, is just being patient, right? And giving yourself time to slow down trading to your liking, right? Remember, you're in control behind the computer.
And let me tell you, there is nothing scarier than not knowing how to trade and taking a 0 DTE position immediately off open and seeing it go 30% up, negative 60% down. I remember one day, and this is in like the probably first week of me actually trading. I'm like, oh, this is expiring today. Oh, this is cheap. And it was Tesla. And I've never lost money in that volume so quickly. So be aware, like the less time you have, the more volatile things are. You have more of an opportunity to make money, but as a beginner trader, I do not recommend getting into something with several $1,000s that can be zero in like 5 minutes. It's just not good for you mentally, right? That one really fucked me up. I was scared. At that point, I didn't really know how to use TOS very well either, so I couldn't like exit quick. So I would not recommend that route for learning. People always talk about paying market tuition. That was just market robbery. Not really. I didn't really learn anything other than not to do that. So make sure that if you're gonna lose money, at least you get something out of it.
So I'm gonna come back to another question. It kind of goes off what Coco asked a few questions ago, but basically, what are mental practices that we all do to help prevent revenge trading or trying to finish green on the day when you're already red? Mentally, what do you do to avoid forcing trades to try and finish green, or do you just walk away? Like, what's your personal opinion on that?
Leave, go to the gym, anything but trade. I mean, like assuming that I always have like a daily risk tolerance. Like just for example, let's say I have $10,000 in an account. I'm down, 1,100 to 1,500, maybe $2,000. So a pretty good portion of the account. It's like at some point you gotta stop trying to fight it. Your mental game isn't very strong at that point. Yeah, you can make it back, but would you have a better chance the next day having a full trading day than that same day having an hour? Really have to weigh the pros and the cons. And sometimes if I find myself itching to get back in another trade, I do have to just shut my computer off and walk away. I've done that numerous times where I just like, I need to fucking leave this room right now.
I'm going to switch you quickly to on that too, because this happened to me recently, right? So I think it was the day we were all trading SPX, like Hassan, Mitchell, and I, and like everything just went like 1,000%. I think Mitch, he had like a 1,200% contract, and Hassan had another like 300-400% gain. So for me, I was down that day, and I agree with Mitchell. One of the things is like you have to learn like when to walk away, whether it's a certain percentage you lost, whether it's you've taken 2 or 3 or 4 or 5 trades and it's just not working and it's within your percent loss for the day in your portfolio, right? The other thing too is like if you stay on the computer, it's fine as long as you don't take a trade. But if you're going to try to take a trade, you have to make sure like you have to reset. At least this is what I do. I like to walk away, give myself 30 minutes to an hour. I come back and I start looking, not necessarily for a trade, but looking for other opportunities later on. If a trade happens to align with all your criteria, for example, in a strategy that you know works for you, right? Like a bread and butter type trade, then you could take, right? But you have to have a tighter downside risk than you would already have. Ultimately, the best thing for you to do is just walk away, right? Because if you have that fear of like, hey, I'm going to get in this trade and I don't know if I'm going to be able to handle this, walk away. If you have the composure, right? Because you've kind of been trading for a little bit longer for those who are a little bit more experienced, you just have to have that mental reset to yourself and say, hey, this is no different than the shit I've already done. I just got to be patient. Got to look at what happened in my last couple of trades and see if the opportunity presents itself the correct manner. If it doesn't, right? And that's a checklist before you enter that revenge trade, right? If that criteria doesn't align, just walk away. Like we said, you have multiple days. The market is not going anywhere. The market doesn't care if Hassan makes 300K, Mitchell makes 100,000, if I make 50,000 or lose 50,000, it's going to be there every single day. So just know everywhere in the world with the market, there's a new opportunity for someone else. That day just might not have been yours. That's plain and simple.
So I'll speak on this from my perspective too, but I mean, for me to avoid revenge trading, literally, if I'm down or even green on the day and I want to keep trading, I'll like say I'm green on the day, $500. I'll risk less than $500 on a total position because I know I'm gonna sell early for a loss at 20%. So I'm not gonna lose everything I'm up. And if I'm already red on the day, I usually go off like what Mitchell said as well. Like I have a set like loss on the day total that if I'm in that zone or I already passed it, I just won't trade based off the fact that I'm trying to make money to get in like a comfortable area to say I'm stepping away at this point. So I'd rather just sleep on it, walk away, close everything, get my mental ready for the next day. If it's a Friday, I'll just take the whole weekend, relax, meditate, and just figure stuff out for when Monday comes around.
My answer would be the same exact answer that I answered for the 3 previous questions. It's the same thing. Is it in my planned risk to reward? If the answer is no, and it's a little bit more than my planned risk to reward, let's say I planned on max loss of $2,000 and I'm currently down 3,000. You have to understand when you're down 3,000 and it's not planned, you're in kind of an emotional state of trading. So when you're trading, you're going to be thinking more with your emotions than with your than if the setup is pretty much logical. And I'll be honest with you, based on my past previous actions, when I am emotional, trading is just fucking through the walls, man. It's just lotos and gambling and hoping and for me as a trader, I don't like that when I'm sitting here and the setup could be amazing, but the thing goes minus 10% and immediately my emotional state will come out and I'll immediately exit the position and watch it go 100 200%, and it just creates kind of like a spiral effect. So if it's in my planned risk to reward, I will continue. If it's not, simply close the broker, come back to it the next day. You gotta understand the market's there every single day. There's setups every single day. Most of the time, you will not hold to 1,000%. That's why I see a lot of people like, oh, the trade could have won 1,000%. I'd have been green. Was it in your planned, risk to reward? Were you planning on holding, through the ups and downs as it's going to 1,000%? If the answer is no, then you should be worried about nothing. Simply kind of take a step back, focus on your mistake, focus on your mental health. Mental health is I believe is probably one of the best with trading. In order to trade, you need good, healthy, positive mental. So when you're losing, a lot of people go immediately into kind of an emotional mindset. They kind of entertain negative thoughts, and with trading, if you entertain negative thoughts and you go in and you just fuck shit up. And I've seen a lot of people just go through spirals, and it is way harder to dig yourself out of a hole with 10 failed trades than it is to dig yourself out of a hole with 1 or 2 mistakes you've made. It's easier to dig yourself out of a hole when it's just 2 trades, but when it's 10 losing trades all together, all in a row, it's incredibly hard to dig yourself out of that hole, because the hole is so fucking deep. You need 10 plays that are going to be 100% each in order to break even. So simply, if it's in your planned risk to reward, it's okay to continue. If it's over and you're feeling emotional and you're having that I am going to revenge trade the fuck out of this, then it's your code. Like, hey man, close the broker, come back the next day. It's all you can do. That's literally all you can do.
So we are past that hour. I don't know if you want to stay a little bit longer, Hassan, if you want to get going, but if anyone else has any quick questions before.
It's all good, bro.
Yeah, I have
So it's all good.
I have to take off. I have a dinner, so I will catch you all tomorrow.
Appreciate you being here, Mitchell.
My brother. So
Bye,
Talk to you guys later.
Mitchell.
I'm
Peace.
Bye, Mitchell.
So I'm gonna go back to, Kenny. I'm going back to your question right now, and I know Hassan's gonna have a lot of good input on this since he's a completely different time of the day trader than me. So he's basically saying, Hassan, he lives in Hawaii. Market open over there is 3:30 a.m. for him, and it closes around 10 a.m. in the morning. Realistically, he can only play closing power hour, basically end of the day. And he just wants to know if that's like a good risk to reward for himself, if he can manage that, and is he able to play that with end of the day volume. I'll touch on it real quick, since like that's one of my specialties with like lower risk, high reward for my return. I play end of the day only because I can actually see what's happened from open to lunch hours to 1 p.m. Eastern. So I have a good visual of what could happen off zones for the day of and correlating that historically. So if you are good at not having to look at the market at open and you want to sleep in, I don't think it's a bad idea. But if you don't want quick moving contracts, like what Kenny was saying earlier, don't play zero DTE end of the day if you don't have that, like you like fast moves, you like that anticipation, you like that adrenaline rush. Add a few weeks to the contracts, play the end of the week for SPY or SPX if you play that, play 2 weeks out, 3 weeks out for like a regular stock like Apple or Amazon. And I'll let Hassan talk on what he thinks, because I know he plays any time of the day mostly.
What you said is phenomenal advice. Now, since he is probably going to be trading in the last hour, now the last hour you've seen the risk to reward is phenomenal. You can risk 20 cents to make $3, $4. You can see trades go 10 RR, 5 RR, but at the same time you can see a lot of trades go to straight to zero. So if you are kind of you like the risk, you don't mind trading the risk, power hour is probably really good for you to trade. Now, based on the past couple of days, if you look at power hour versus the open is just complete chop, lunchtime is chop. Power hour, you actually get a decent kind of move where it's not choppy. It kind of gives you the full move. But if you kind of don't like the risk and you'd like to kind of size up and you do not want to risk 30-40% in order to make 120, 130, you can size up and buy the next day expo on SPX. They're more expensive. They're going to be like 10 or $8 compared to $1.30, but it will go from $10 to $14, which is still 40%. If I'm sizing up a good amount, I'm buying 10, 20 contracts. It's way better than me buying 2 contracts at $1 than holding it to $2. I'm going to be making more money, sure, even though the percentage is more on the other hand. So it all really depends on the risk management that you have. Again, a lot of the questions, they're going to come back to the same topic: risk management and mental. I, as a trader, I like to focus on risk management and the mental game of trading. But to answer your question, what do you like to do as sizing? Can you reply? What is your sizing, Kenny? When you're entering these power hour trades, what's your sizing? Because once you answer what's your sizing, the entire answer will change. But if your sizing is light, you probably want to. The risk to reward is pretty good. Power hour, ODTEs. If your sizing is a little bit heavier, you definitely want to be taking a little bit of extra time. That way you can kind of hold the trade longer if you wanted to hold it into a kind of a swing position, since you have time on it. But you can also size up because it's not going to go to zero at the end of the day. A lot of people fail to recognize that time is probably the best part in options trading. You could kind of buy 2 years time, 1 year time, 6 months time. And you do realize, if you, from a hindsight type of view, you look at the market, the past 10 years, it goes up. It only goes up. It goes down for a little bit, but in the end of the day, it pretty much goes up. So if you buy time, you're chilling when it comes to, percentage return. You'll get your percentage return. It's those 0 day to expiries on choppy days, non-trend days that destroy traders, because they all of them go to zero. You look at the option chain, from 40.50 all the way to 4100, all of them at zero. But this morning, when we were trading at 40.60, 4100 looks really good. It could potentially push. Could be $2, $3. You're looking at it right now, closes at zero. I usually enter with 1 contract at most, 1 to 3, 5 when I'm feeling confident on that trade. Yeah, if you're feeling confident on that trade and the risk reward is good, yeah, you can enter, heavier sizes at the end of the day. But if you want to kind of be risk off, you can buy 1 extra day. So instead of buying 0 day to expiry, you buy literally the next day. And that last hour, these premiums will move still, because if the last hour is 20 points up or 20 points down, you're still got a pretty decent move, and your sizing is higher. So your percentage might be lower, but your sizing is higher. So it's a win-win.
So he said, I mean, I can answer this too, and you can give your input. But he just said, if I play the next day, would I have to sell at the opening, right? So
No, you can sell immediately. You can.
yeah, you can wait. You can sell the day of, the next day, but you have until the expiration of that contract hits that end of the day. So if you play end of the day tomorrow, you have from when you entered today to sell until market close, and then you have all day tomorrow to sell whenever you want to.
Like with ODTE, like I tell people, oh, I hit 100% on the trade. Well, okay, how much do you put? I put $100. Congratulations, you made $100. I went and I hit 40% on a next day expiration. They're like, oh yeah, but you only hit 40%. Yeah, well, I put 10 fucking grand. Well, I made $4,000. You made $100, and it's made the same move. With the next day, I could size up more because it's not going to go to zero at the end of the day, and it's not going to have the fluctuation where it goes from 0.30 to $1 to 75 cents to $6. 1 minute later, it's at $3. The other one's going to go $10, 10.5, 11. 11 will go to 10.5. From 10.5, we'll go to 13. 13, it will go to 12.5. I'm still making money. I'm still in the green, as opposed to a lotto end of day. You see the fluctuation on the contract. It goes from $1 to $6. 1 minute later, it's at $1. It's at $1. Like, holy shit, what happened? And it's fast. It's fast. It's fast. So it's all really relative to what you like to trade and what your risk on the trade is.
So does anyone else have any more questions they want to speak or type in the chat?
I think we answered them all. I was looking at them.
Yeah, that's all of them for now. I'm just, let's see if anyone else has anything, because if not, this is, we can wrap it up right here.
That's it. Also, guys, I'll be back on Monday, fresh and ready for you guys on Monday. I was just fasting. It's really hard to trade while you're fasting. No water, no vape. And I would get a little bit angry, especially with the chop. I mean, looking at the market, I would have taken a few L's this weekend. I'm glad I actually kind of just took a step back to, it's always good to kind of take a step back. No vape, bro.
Plus,
You need
no
vape.
1,000% without the vape, baby.
Bro, I sit there and I just the whole time, keeping me calm, keeping me calm.
What do you
Because,
think? What do you think pumps those contracts? It's that vape juice, baby.
Let's get it, my Kenny. Let's get it. I'm done.
I'm about to start smoking hookah when I trade.
Almost done, bro. I got 20 more days left.
I know.
Not going to do anything tomorrow for PC. Actually, bro, this entire week I withdrew my accounts. Even if I wanted to trade tomorrow, my wire wouldn't even arrive in time. So nothing for PC.
I mean, my response for that, I mean,
I withdraw my accounts, bro. I feel like sometimes I don't have any self-control. I'll just sit in bed and take a bunch of random boredom trades. So I withdraw my account, with Interactive Broker. If you withdraw to 24,999, you simply can't trade. So you don't really have to withdraw too much, with margin on Interactive Broker. If it's $1 under 25K, you simply cannot trade. So I simply keep it a few dollars under 25K, so I can't trade. And this is the first time I actually take a break. If I'm being completely honest with you, a full break, detachment from the markets. Actually, my first time in almost 4 years, and I feel much better, mentally. You gotta understand also from my point of view, like I have to signal to a lot of people. I gotta type on Twitter. I gotta post on Instagram. And this week, man, I literally just threw the phone and I was like, I don't really care. I'm just gonna take time for myself to just mentally reset.
So someone said, how often do you recommend us withdrawing, Rippy God?
I withdraw almost every single day. Now, when I first started, my biggest mistake was not withdrawing my money, was not even enjoying any fruits of my labor. I remember one of my biggest sports that I had, when I was first starting was around $51,000. And at a time I kind of leveraged it to the max, with full margin. And once that portfolio kind of got liquidated, I realized like, oh, I made all this money, but I never spent a single dollar on myself. I never withdrew any money. I just kept kind of wanting to compound it more and more. What I learned is if you withdraw, let's say you withdraw, you take your account from 1,000 to 10,000, you withdraw 7,000 and you're back at 3,000. Now with the 3,000, you can compound it back to 10 grand, or let's say you fuck up and you blow the 3K to zero. Because you withdrew 7,000, you can come right back in like nothing happened. You're good. You withdrew. A lot of people, they do not withdraw, and when they want to withdraw, it's pretty much too late at that point because there's really nothing. So you kind of want to withdraw. For example, how I used to kind of set it up when I'm trading $100,000 account is any day over $10,000 was withdrawn immediately on the spot. Any day under $10,000 was used to kind of build and compound the portfolio. But if I'm trading, with $1,000 portfolio and I take the 1,000 into 1,500, it's always good to pay yourself to withdraw, but it's also good to have cash in the bank. I'd rather be rich in the bank than rich in the portfolio. And how often do you recommend this withdrawing? What is the sizing that you are playing, my brother? What's the sizing? What's the portfolio you're trading? What's the portfolio you're trading, and what's the average PNL? You're trading a 3K portfolio. What's the average PNL, my brother, on a winning day? 300. So if you hit 300, I would recommend you to withdraw that 300. Anything under 300, use it to kind of build and compound the portfolio.
I have a little bit of a different strategy, but something similar. Very simple. If you I have a philosophy, like when I first started trading, right? I'm assuming a lot of people here work. Okay, is 3K account good for a rookie? Yeah, 3K account's pretty flexible. I mean, I like Hassan and Nick can talk about it. I actually started when I first started trading. I started with like $250. I grew that to like 25K. It took me about like 3 to 4 months of being like, once I was, I'm not saying like when I first started, I'm saying like when I first started being profitable and consistent. Let me say that first. Took like $250, turned into 25K, and I withdrew pretty much 20,000, left about 5. I lost like 2,500, and then right then and there, when I was at 2,500 after the withdrawal, I contemplated putting money back, and I said, you know what, I'm gonna take out
to actually push it up from a low end, like from 25 into upside as
yeah, and so like that's something that I took into consideration. So at the 2,500 that I had, I said, you know what, let me do this. I'm going to bank 1,500 and I'm going to keep 1,000. And if I can do this with 1,000 and grow it back, then everything thereforth is free house money. Now, the market, right? If you have any type of brokerage account, a lot of people don't realize this. You can get like a debit card, right? If you wanted to, and use that. So I call the market an ATM, right? When you lose money, it's fees. When you make money, it's withdrawals, right? But you need to be able to make the money, right, on the house money. So let's say, for example, you're working a job, you make $30,000 a year, right? Take 10% of your salary, 10% of every check, and deposit it away into a savings account. Now, what does that mean? That means for you as a rookie at 3K, a $30,000 salary, $3,000 is 10% savings. That is something you can start with as a budget, right? That's your budget. You put that away. That is the max risk. You start there. Let's say you take the $3,000 into 6,000, withdraw it back down to 3, bank 3,000 of your money back, and now you're trading with $3,000. Everyone here has probably played video games, right? Let's say you play Call of Duty, Halo, whatever. It's like respawn, right? Once you die, what happens? You come back. So if you already made the money and you could play house money, then you don't have to worry about withdrawing. Just say like this, okay, I have $3,000, and now every time I grow my account to a comfortable amount that I want to withdraw, I'm going to withdraw every week. Whatever my balance is, I'm going to withdraw it back down to the free house money. whether that's 3,000, 2,000, 1,000, 4,000, 5,000. So you could be realistic. If you want to make Hassan's money for the most part, you might need a little bit more cash to make the monetary values, but the percentages are the same, right? Hassan could take a $20,000 account and I could use 1,000. I could hit the same trade and the percentages are the same. The monetary is different, but the withdrawals could be the same too. If he withdraws 50%, I can withdraw 50%. So keep that in mind. Don't be afraid to pay yourself back. And that's one of the biggest things traders forget to do is you put all this time, you put all this effort, but then you don't actually realize anything until you withdraw that money and put it in your pocket, right? What is the point of doing all this if you're not putting it back in your pocket?
100%, bro. I'm a firm believer that you know, you have to kind of withdraw. If you withdrawing is actually part of my trading system. If I do not withdraw, you know, I can't really live. I can't pay my bills. I can't pay my rent. You know, withdrawing is the whole point of why I trade. You know, and like you said, if you double your account and you withdraw it all, the double, the 3,000 that you doubled, you have $3,000 to kind of respond with if you were to kind of fuck up completely or fuck up royally. But at the same time, you have $3,000 that you've made that you can pay your bills, you can go out, you can enjoy fucking life. Why do you trade? Like, you trade for freedom. You trade freedom of time. If you're making $300 a day, you can do that consistently with a $3,000 port. Pay yourself. Who gives a shit if it's $300? That $300 will turn into $400, will turn into $500. And I know when you're a beginner, it's hard to hear like, oh yeah, but it's easy for you to say when you're making $2-3 grand, $4 grand per day. Yeah, well, I was at the same spot. I was making $100 per day. I was making $200 per day. I was making $300 per day. Gradually, as you become a better trader, as the market gives you better setups, as you have, you know, better risk to reward, you will make more money. There's some days where the market will run 100 points and it will just the entire time go up or the entire time go down. Those are the days where you can kind of take full advantage of your portfolio, and instead of making 300, you can make 600, 700, 800, you know. But paying yourself is probably the best thing you can do as a trader. If you don't pay yourself, I promise you, and I've had one guy where he never paid himself. And when things get hard, you know, when you start that revenge cycle, that revenge trade, and you want to come back to what you used to have, you're gonna lose it all. You blow it. And I've seen multiple examples because I've actually teach so many people now that I've been you know, that I have a Discord, have mastermind, and I've seen literally all the scenarios. And the best scenario, the best outcome for you to be able to respond again, like Kenny just said, is to withdraw. And it doesn't matter if it's $100 or $200 or $300. It's the same thing. You are your own boss. There's no boss. At the end of the week, you're not going to get a paycheck. You know, that's the difference between a 9-to-5 and you. You're self-employed. At the end of the week, there's no paycheck coming in the mail. There's no direct deposit coming inside your bank account. You are in control. You want to pay yourself $500, you pay yourself $500. You want to deposit $500, well, you know, that's on you as well. So you're in control of the entire situation. Uncle Fish was the biggest one. He's doing fine, but he regrets never paying himself, especially when all you told him to. Yep, that is actually the example I'm talking about, Jad Zaytoun. He never paid himself. He never paid himself. I actually got a text from him about 2 weeks ago, and he's like, bro, I regret it. I regret never paying myself. It's like, you gotta understand, nobody's perfect, bro. We all go through bad trades, bad kind of setups, and you do lose. You do go into drawdowns. But if you pay yourself, if you keep your portfolio smaller, you know, the drawdowns are going to be less. But I have money in the bank to kind of respawn again. If I have no money in the bank to respawn again, what the fuck is the point of it? I'm basically in a casino, just gambling it off. You know, you have to pay yourself. You are your own boss. Treat yourself. Yeah, man. I like to, especially after a large winning day, bro. I'll be honest with you. I withdraw, and I'll spend a little bit on myself, bro, because it's the fruits of your own labor. You're the one working. You're the one putting in hours and hours of time on the back end that nobody sees. The people only see the profits. Yeah, well, you don't know the years of struggle, the years of mistakes, the years of learning. You have to kind of a little bit enjoy the work.
Also, like when you have those days, right, and you make bank, man, I know Hassan will back me up on this because, like, like you told me, the first thing you will do will be counterintuitive to the best thing that you should do. The first thing you will do is, I've just made all this money, therefore I am now able to trade larger, or I can risk this to make this. And that is fundamentally going against everything.
Rippy Mayhem,
You
you know,
take-
right now, right this second, I could fund $1 million portfolio if I wanted to right now, and I could.
You don't need to.
Large size, but I don't need to. I don't need to kind of
Yes.
put that unwanted emotional stress on myself, bro. Understand?
100%.
Go in with 100K position sizing. That minus 20%. It's still 20%,
Huge.
but it's $20,000 now as opposed
Yeah,
to
huge.
$2,000 or $3,000. It's still down 20%, but mentally
Yeah.
down 20,000 as opposed to down 2,000. So you're going to react emotionally. So
Yeah.
size
And
down,
honestly,
size down. I promise you, it's the best thing you can do.
literally,
Size down.
hold a contract and just let the fucker run. If it doesn't run, it hits your stop loss and you're only ever down the amount you were down. That's it.
100%, bro.
That's it. But in saying that, the hardest thing to do is actually to do that. And one of the best things to do is to pay yourself, because the moment you pay yourself, you have a tangible reality that you can hold on to, that you can say, this is mine. This is what I have as a return for my work. That changes your perspective.
Pay yourself, so at least
Yes.
your wife and your or whoever's behind you can see at least some money coming in, and not just money going money going in.
Realize it. Turn it into a reality. It's not a reality if it stays in your fucking brokerage.
It's
that
not
simple.
yours. It's not yours. It's in the broker.
Yeah, you take it out. And like
zero.
And like, you just look at the statistics of any casino, they make their money back after big wins because people go DJ. Walk the fuck out. You beat the house. Go.
Why do you think that in the casino, when you go win 100 grand, why do you think they give you a room? They give you
Yeah,
they want you to stay to give it back. It's the same thing in the market.
Yeah, 100%. That's so true. That's all.
I actually agree. Because I've been trading for about let's say a year and a half, and I was following traders, and then the past 6 months to 8 months, I've kind of been teaching and learning to grow myself. And every time I make a profit and I leave it in the market and try to size up a little bit more. So like 2 months ago, 3 months ago, I actually funded my account with $2,000. And every day, literally, I was making $300 to $400, and I was transferring that from the Robinhood account to the Robinhood credit debit card, which I actually went to the ATM and withdrew that $200 to $300 every single day. So when I look at my journal, within like 3 weeks, I was up almost $4,000. So me breaking my rules during Fed weeks, actually, I blew the account, and that kind of teach me a lesson. So I told myself, let me just take a step back, continue doing like paper trading. And when I start back again and do the same thing over and over, just as soon as I make the profit, and then transfer it to the Robinhood card, and then withdraw the money, which is, I never thought about it like that, which is a great way of seeing it, is pay yourself first.
Yeah, straight facts.
Brother, if you don't pay yourself first, the market's going to take it from you. Like last year, like people tell me, why don't you size up the account? Why don't you trade the account? This year, I actually sized up the account. Last year, I wouldn't keep the account more than 20,000. Oh, but last year, you know, was different because Interactive Brokers has instant settlement, and it was like anything under 25K was like a margin account. So it was pretty much amazing to kind of trade. But I was the same sizing. 20,000, you know, I don't want to size up too much. When you size up too much, the losses are so heavier. Like even when I've sized up my port this year, I was like, God damn, bro, like these minus 20%, minus 30, minus 40, they actually fucking hurt because the sizing is way higher. Maybe I should kind of dial it back down and size down. And you know, the biggest problem that a lot of beginners have is, oh, okay, I turned this 1,000 into 5,000. Okay, let me turn this 5,000 into 10,000. And what happens is when they turn the 5,000 into 1,000, they're trading with aggressive sizing. They're trading with a, you know, already, oh, I already made 5K. I can make again. If you withdraw the 4,000 and then start again from 1,000 and turn that 1,000 again to 5,000, that is consistency. That's way better than the guy saying, okay, I'm going to turn 5 grand into 10, and then you turn, you know, that 5 into 2, and then you're panicking, and then you're back at break even, and they're like, oh fuck, I got to restart again. Paying yourself will always give you kind of a cushion, like a bankroll, whatever you guys call it, a bankroll. You're creating a bankroll for yourself outside the market. You fuck up, boom, 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 wire it back in if you need to, or fix your mistake
But
with a
it's
smaller amount.
but also then take perspective of compounding, right? So say everyone's like, you know what I mean, everyone goes and quits their full-time job and gets into trading, which is stupidest fucking thing. At the moment, if you can maintain income via a full-time job and you can hit 250, 300 US dollars 3 to 4 times out of a week consistently, you compound that over a year with your salary. You're in the top 5% in any country in the world. Do you know what I mean? Like that's game-changing money, and people don't put perspective on what $300 a day does over a period of days.
Bro, $100 a day gives you an extra $25,000.
It's free gas. It's free gas. It's your electricity bills. It's everything. It's the ability.
Your salary is 50K, bro. That's half of your fucking salary coming in from you making $100. And I know for a fucking fact, every single person in here, you know, finds it pretty relatively easy.
You can easily make 300
to make $100. Even as rookie traders, you'll see, oh, you'll go up $100, then you'll go down $100. You know, play your port size. If your portfolio is $1,000 and you make $100, that's 10% in one fucking day.
It's huge.
Hedge funds, you know, fucking hedge funds, 7% per year, and it's barely 7% per year. You're making
On top of that,
big.
just so you guys know what Hassan just said about $100 a day, right? $25 a year. Let me tell everyone this, because I know everyone here is thinking the same fucking thing. I want to make $100,000. I have 1,000 and I want 100K. Warren Buffett says I need to get 100K. Charlie Munger says I need to get 100K. Social media says I need 100K. What if I told you, if I guaranteed you guys $100,000 and all you had to do is be patient and consistent, would you do it for whatever time frame? Everyone here would say yes.
Everyone.
So very simple.
Where'd you go?
Patience, man. We live in a world where everything's today. Everybody wants it today. Everybody wants, and that's like.
Wait, that's the problem, bro. Nobody wants to wait. Everybody thinks it's
But
very
it's
easy to kind of make this, bro. Like, I'll be
change
honest.
your perspective. It's your perspective, man. Like
Yeah,
it's like everything is perspective, man. Everything is perspective, right?
Just to touch on Hassan's point, for everyone who's trading smaller accounts, 500, 1,000, 3,000, whatever, $100 goes a long way. Like, if you guys break and make trading easier, right? Think about this. If everyone here wants to aim for a $100,000 portfolio, take a $1,000 account, be consistent, make 10% a day, or take 1,000 trades, and in those 1,000 trades, try to make $100 without having maximum drawdowns. Very simple math. 1,000 trades times $100 is 100,000. The hard part is just being patient and consistent for that continuous 10%. You know, you guys saw me come into the Discord posting 5% portfolio, 7% portfolio, 10%, 15% on a day consistently for a few days in a row. Right? So if I can do it, you guys can do it. It's no different. It's just a matter of the experience behind, and I don't want to talk about experience of like knowing what to see, taking what trades. No, it's just about behavior. That's the market. It is a behavioral game. Be patient, wait for the right trade, wait for things to set up correctly, and just be consistent, and things will come your way. Nick talks about it all
The
the
market's
time.
just going to hold a
right?
mirror up to you.
Nick tells it all the time. He says, like, I'm watching this contract on Netflix. He said it like this week, like I don't know how many times. He was watching Netflix multiple times, SPX multiple times. He waited the whole fucking day, right? Look at how patience paid him. And he banged it on SPX. He banged it on Netflix, right? And even if he doesn't get the move that day, okay, he's like, oh, whatever. I didn't get the entry I wanted, no problem. I'll just wait for tomorrow. So it's just about being patient, and it's just about knowing, hey, just being consistent and knowing that trading is the journey, right? Hassan talks about it. Rippy Mayhem talks about it. Mitchell fucking preaches it like bread and butter. Just be patient and enjoy the journey. Don't rush to get to your final destination, right? Killing yourself. Because if you could do it every single day, little by little, you're going to get there, and then everything becomes easier.
Everything you're ever taught in life, it doesn't matter whether it's fucking children's books or whether it's stuff that's sewn into the core concept of movies. The moment you turn your journey into the end destination, you will fail.
I don't know if he got cut off or if he just stopped talking. I feel like going off what Rippy Mayhem just said, a lot of people, they're so focused on like, I want to get to this amount. They don't understand that to make 2,000 on a trade when you're positioned for 1,000, you may have to hold on a red just to get that extra push. You may have to hold down 20%. You may have to hold down 60%. Can you manage being red to be green on a trade? Can you manage being green, going down to red, then coming back to green on the trade? A lot of people, all they're focused on is if I just put in $1,000, I'll make 500 a day every time I trade 50% back to back. One oversized, like Hassan said earlier, you just lost 30 days back to back of green trades off of oversizing, and you never trimmed, you never sold early. And that's what would destroy me so many times. I would think I got this down. I'd oversize. Next thing I know, I'm back to 2 months ago where I was account size. My mental's gone. I have no confidence. And at this point, I just, like Kenny said, I wait all day for the best setup. If I don't hit the setup, I'll come back tomorrow. I'll wait all day if I have to for one trade that takes 3 minutes in and out.
Can you hear me?
Yeah, now we can.
Yeah, so like, and see, this is the thing, like, full disclosure, right? I'm happy to be real. I'll put everything on the line. Like, in terms of trading, right, I only had a conversation with Nick fucking 3 days ago, and it was literally everything we're talking about now. Everything is a journey. You have to come back. You have to constantly self-reflect, right? I literally said to him, man, did the dumbest shit. And he's like, yo, you do dumb shit. Like, I can preach to you, but if you don't actually apply shit, right? And this is the thing about patience and application, because say you did what Hassan did or what Kenny just said, you take $100 a day, right? And you hit $100 3 days, just 3 days out of the week. And then you saw the contract that Rippy Jarvis sent. You know what I mean? Jarvis sends this banging fucking play that goes 1,200%, right? Could have bought damn near 4 contracts of that, and you still would have been up $300 on the week. And that play ran 1,200%. Do you know what I mean? By being patient, you give yourself time, you give yourself other opportunities. That's what people don't see. That's what they don't see in the consistency. And when you do that, man, like, you create your reality and you will create better opportunities. Whereas if you go against that, you become negative, you will actually make more negative plays, and that's the end result. Like, it's that simple. It is that simple. Actually refining that is the hardest thing you'll ever do.
Does anyone else have any questions you want to type in? Right now is the best time.
Well, it's time for me to eat again. I've been drinking water, brother, all day.
To try not to die. I
Brother,
don't know how you, man. I don't know how you do it. I fast a lot, but fuck.
bro, you just fast from 5:50 a.m. until 7:40 p.m. Not too bad.
Yeah. Get abs, bro. Do some crunches.
What?
get some abs, do some crunches, take
Oh, bro,
advantage of it.
I went for a walk the other day with my dog, and
Yeah.
I was 1 hour and a half before I could break my fast. And this fucking bulldog, bro, does not know how to fucking walk, just likes to run. I went back, I almost died, bro. I almost died.
It's crazy, man. It's like on that though, like, man, get to the gym every day, do your meditation, do whatever it is that chills you the fuck out and balances out the market, because what people don't really like, the market is the most unnatural thing we do. So you've got to offset that. You got to go out with your dog. You got to go out with your girlfriend.
Look at you, Rippy Mayhem, finally understanding, finally learning after how many
Yeah, but like, man, I can remember I called Mitchell one night and I was like, I think I need to take the day off tomorrow. He's like, wow. I was like, I just blew like, oh man, fucking into it. It's the hardest shit you'll ever do, but the best thing, because you can change other people's lives, man. Like, you can't do that in any other job like that. Like, it's that simple, man. We're all lucky.
Beautiful.
So there's one more question someone said, and I think Hassani may be the best to answer this. How was the transition like from taking trading full time, and then since from not working a regular job 9 to 5, overtaking trading?
Well, the transition in the beginning was incredibly hard, if I'm being completely honest with you, because again, that paycheck wasn't coming in at the end of the month. There was no paycheck coming in. You know, it was exactly how much I would kind of pay myself coming into the month, coming into the week. But the transition from being like a 9 to 5 to a full-time trader is it's a beautiful kind of process. If I were to recommend it to anyone, I would at least say if you can have at least 2 years worth of savings of your kind of yearly income before making that jump, just so you can have kind of a cushion to fall back on just in case you do something. But the main transition for me was there was no paycheck coming in at the end of the week or at the end of the month or at the end of each month. You know, so it was kind of planning how much I was going to pay myself in order to kind of sustain my bills. It was it's a process because you go from an employee mindset to kind of like a boss mindset.
Yeah.
The transition is completely different, because there's a boss telling you, okay, at 5 p.m. you know you're done for the day. When you're kind of a trader, you know, at 5 p.m. I got to kind of plan my trades for tomorrow. I got to wake up, you know, 2 hours earlier before the market to kind of set up my trades for the following day. I have to kind of scan, I have to look for volume. I have to, you know, there's a lot of work that is
It is all on you.
You know, and it's all on you. And if you fuck up, there's nothing to fall back on. Now, if I'm trading and I have a job and I fuck up, there's a job that's going to kind of provide me some form of cash flow so I can kind of fall back on. So it's a hard transition. The best way to transition is to kind of have an income to support yourself, whether it's like 20 grand, 30 grand, anything where you can fall back on, where you can pay your rent, where you can pay your bills. When I transitioned, I was doing insurance sales. So at the same time, I could have worked whatever time I really wanted, because I was technically making my own schedule, but I would still have to go into an office some days, which would kind of miss with my trading. But when I quit, I had pretty much a few couple how much did I have? I don't remember the exact amount, but I had a good amount where I could live, you know, humbly by paying my rent and eating. You know, I don't have any dependents on me. When I first started trading, I'm not married or anything. I just, you know, take care a little bit of my family and stuff like that. But it's really all how you how you look at it, you know, how you want to pay yourself. You don't want to pay yourself, you know, you're going to be back at that 9 to 5 very fucking quickly. You pay yourself, you go gradually. You as you climb the ladder, you know, you gradually climb the ladder. You gotta understand, fast money equals fast losses. You want to get rich fast in trading, you're gonna get poor very, 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 very fast. And also, don't think that your 10 grand account is anything compared to the market. Some of these guys, the volume is in the millions, billions, and trillions. So your 10 grand is not even a little drop in their pond, and they will take it from you very, 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 very fast. So
Without even asking.
yeah, they'll take it from you incredibly fast. So you gotta manage your risk, you gotta manage your time, you gotta manage your mental. It's all a game, bro. It's literally a mental game. And the
But it's zero sum as well. Do you know what I mean? Like it's either you or them. It's that simple. Do you want to keep money in your pocket or their pocket? And like things like immediately moving your stop loss, especially as a new trader, man, you might get wicked out, and that trade might run 50 points in the direction that you want. You might have made all this money, but you still close green. And green compounds, and that makes a difference, man. It makes such a difference. Like everyone talks about it, everyone preaches it. But man, if you go in there with a 10K account and you think you're going to make $1 million, you're not. You're just going to buy a market maker his really expensive bottle of wine at lunch.
Also, you have to keep your ego in check. If you're making $1,000, every 2 weeks in your 9-to-5 job, and now here you're making, $500 a day, withdraw it. Like you're already making, what you would make in 2 weeks in 1 day.
So much money.
Pay yourself, bro. That is what most traders fail to fucking recognize. And also, when it's choppy market conditions, take a fucking step back. You don't have to trade every single day. I'm telling you, this entire week, I didn't even open the market. I don't even know what the SPX closed on Monday, Tuesday, Wednesday, Thursday. I don't know, and I don't even care, because I know on Monday that beautiful market is going to be there, setups are going to be there, and I'm going to execute because I'm in a much better mental headspace. Beautiful.
So I think
So
that
much
may
for
be,
having me here today.
yeah.
My hibernation vacation, but I'll see you all on Monday, and have a good day, Mayhem and Nick. Appreciate you guys in here.
Arrivederci. Oh, nice jumper, bro.
Enjoy the vape juice, Habibi.
Yeah, thanks for coming, Hassan.
Appreciate it, my bro. Of course. My pleasure.
Bye.
Beautiful.
Have a good one, everyone. Much love. Yeah, it was all good.